Well, hi everyone. Welcome to EduGrowth. Today's session is navigating the US EdTech capital market, and we're thrilled to have US education expert Rita Ferrandino presenting. Rita has built an international reputation as one of the most effective strategists and coalition builders in the education community. She's a recognised STEM education expert and authority on the education policy and politics. Rita is a founding partner at ARC Capital Development, a global private investment and advisory firm. ARC invests in and operates and advises companies in the K-20 education and special needs markets, and has served over 100 clients in the US, Canada, Mexico, Singapore, Hong Kong, China, Ireland, Turkey, Israel, and India. Our clients and portfolio companies provide products generating over $1 billion a year to schools worldwide. Rita currently serves as the president of the Education Design Studio, a private seed fund incubator created in collaboration with the University of Pennsylvania's Graduate School of Education, and is also a capstone instructor for the education entrepreneurship at the University of Pennsylvania's Graduate School. So before I hand you over to Rita, please do feel welcome to ask questions as we go via the chat box, so at any point throughout the presentation. So I'll hand it over to you. Welcome, Rita.
So welcome, everyone. I'm Rita Ferrandino. I'm the founder of ARC Capital Development. We're a private investment and advisory firm that works exclusively in the education and special needs spaces. We invest domestically in the US and internationally. We have serviced over 100 clients and helping them grow their education businesses. And we've deployed $8 million in funds to innovation companies over the last 5 years. The reason I am sitting here with you is because I have a very long and strong history, as Ruth showed you, told you, in building coalitions, and in particular in the STEM education arena. I spent 20 years in the big textbook industry, and really felt that the big textbook industry didn't understand innovation. And so that's when we started the ARC Capital Fund. So we have two sides to our business. We have a small fund where we support innovation pre-seed, and we also advise companies on how to scale their businesses. Here's just some of the companies that we have helped. You, I'm sure, know some of them. So I am going to start with an overview of the international investment market to give you all a sense of what's going on globally, in order for you to be able to then better understand what's happening in the US. So have all of you subscribed to the Holion IQ market research? Just shout on out. We have to make this interactive or it'll be a long hour.
Yes,
and as I was preparing for tonight, I must tell you, well, Patrick and Maria are fairly well known, I'm sure, in your circles. And I think they have the absolute best market research. So I always turn to them first. And I was stunned, absolutely stunned, to read their last report, which really showed that the $3.8 billion in venture capital that has been invested in education technology has come from China. And as you can see from this graphic, they are far and away the biggest leaders in investment. And I started to think back on the deals that we worked on this last year, and there was a Chinese investor in almost every one of them. So here in the red is the Chinese players, the green India, and then the blue is the US. Okay, hold on. Oh. Okay, this is just a summary of the 3.8 billion of venture capital. 26 7 of the EdTech deals were greater than 50 million in 2018, and you can see the breakdown. I love this slide that looks at the venture money from 2014 to 2018. Just look at the increased and continued commitment of China to be investing in EdTech. Here in the US, and we're going to talk about this a little bit later, we really saw in 2016 a dip, but we have seen that rebound in 2017 and 2018. And I'm really confident that in 2019, we will hold steady. But we are still, even at holding steady and a slight increase, really nowhere near China's commitment. And then you've got India and North Korea. And then just a quick look at the total dollars being invested. In US dollars, we are seeing that in 2018, we did 8.2 billion, and I think we are poised and positioned to replicate that in 2019. I was just on a call with Tim from Navitas Ventures, who agreed with me that we're going to see a strong 2019. And they're all bigger deals. Okay. Questions? No questions?
I've got a question. Is there a specific kind of area in the EdTech sector that China is focusing on and investing in specifically, like learning management systems or creative content?
I think that they're certainly heavily involved in the STEM education investments of robotics and anything to do with STEM education. I think you can see that they've got platform plays. I think you can see they've got LMSs. I think that they're they did a deal with BrainCo, which was brain science research, a product of brain science research. So I don't think there's any one particular area. Okay, so the next slide is an overview about how we in the US will look at companies. And this chart is incredibly important for you to understand in terms of how investors are looking at you and what they're going to expect. So over here on the left-hand side are companies that have revenue in the $1 to $3 million range in the US. We have in that group of companies, we have an expectation that you have become very good at a single process for selling, that you are in hundreds of sites. In the second hump, we have companies in the 8 to 12 million in revenue. We expect that they're in thousands of sites. We expect that there's going to be multiple channels of distribution. And we expect to see, by the time you get to be an $8 to $12 million company, that you're specializing in your development of human capital, that you're moving from taking logical guesses and reacting to market opportunities to being opportunistic, to driving your sales pipeline. And here in the $25 to $40 million in revenue companies, we're really expecting that you have a regional approach to sales in the US, that you have multiple channels of distribution, and that you are leading the market. Now, what's critical is that every investor in the US understands that to cross this chasm, there needs to be an infusion of capital into the company in order to cross the chasm. And that is because in order to get from a $3 million in revenue company to an $8 million in revenue company, you have to be able to invest in adding an additional sales distribution channel. You have to be able to scale sales, and you have to be able to develop your product. And you can do that out of cash flow you can raise your capital through free cash in your business. But if you're only $1 million in revenue company, it takes you a long time to save enough money to jump the chasm. And that's true going from 8 to 12 million in revenue to 25 million. There is a need to raise 3 to 5 million in revenue to jump that gap. This is typically your Series A, and the 3 to 5 million is your typical Series B. This is a very important slide that you will continue to come back to. Okay, questions here? No questions? Great.
So we do have a question that's come through for you, Rita. What about pre-revenue?
Prior to $1 million in revenue, that will typically be a angel or friends and family round or pre-seed. It is very difficult in the US to get that money, to get money prior to $1 million in revenue. There's many more companies looking and seeking that funding than there is money and vehicles and vendors to do it. Great. Thank you. So just like all US investors understand the humps, they also understand this selling cycle chart that's in front of you. Now, we did almost an hour webinar. Hi, David.
Hi, Rita. How are you? Sorry to interrupt.
Well, I have been spending a lot of time with David today, so you just have to bear with us, David. We're at the selling cycle slide. And this slide is important because both higher ed and K-12 in the US is primarily funded through federal dollars of our government or state or local government money. And that money comes in a budget cycle. And the black line is the budget cycle. And all of the decisions, which is this aqua line, occur prior to the submission of the budget, because you have to decide what you want so it can be put into the budget so that it can be approved. And the whole selling cycle really flows off of the budget money. Okay, so it's critical for you to be able to explain to the US investors your revenue and how you're going to get your revenue, and there will be an expectation that your revenue number is in support and collaboration with this selling cycle. Okay. We can talk more about that at another time, but this slide is in here because there will be your investors in the US you're going after will all know this. Okay, I'll take, are there any questions?
I'll just check for you, Rita, if there are any in the chat.
Okay.
I do have a question here about, I don't think it fits, so I'll ask it later, sorry.
Okay, great. So the next slide is your distribution channel slide. On the left is your direct, selling directly, your company selling directly into the market. And on the right is indirect, where you're using a dealer or a reseller or an independent agent. And in the US, the investment community will look at your revenue projection using this modeled chart. They want to be able to see that your average sale, which is the bottom row, this is the average revenue you will get per sale, maps to the timing and the kind of sales organization you're building. So if you are building a product that sells between $5,000 to $35,000 per sale. You typically will take 6 to 12 months to do it. It will require 3 to 10 people to decide. It's usually a single solution, and it's usually here in the US sold at a district or a site administrator level, meaning a school. And the inside sales organization is the most efficient and cost-effective way to be supporting the average sale revenue in that category. What that means is that if you have a product that sells for $5,000, you can't have an outside field organization and expect it's going to close in 30 days. You can't mix and match. Okay, and that's the same on the indirect side. And typically, many people often think that the way to sell into the US is, I actually got asked this today. Can you recommend a reseller to sell my product in the US? And I wrote back and said, do you have any customers in the US? Do you know how to sell into the US? And they said, no. I said, do you have any customers in your home country? And they said, no. And I said, you cannot expect a reseller in the US to figure out how to sell your product and be able to pick it up and then quickly be able to sell it for you. It's not possible. So this chart is your reference for that. Now, we can spend quite a bit of time again on this chart. This is all just for you to be able to use as a reference as you're considering going out for US investment, and how you have to be able to craft your revenue story and how to be able to tell your sales organization story.
Can I just put a comment in there, Rita, about resellers, not just in the US, but globally and even locally and domestically, if you're thinking about an indirect sales channel for education products. You need to be incredibly scrupulous and reference check these people really deeply. And if the scenario that Rita just explained, which is you've got no sales in your domestic market, you've got no sales international market, and a reseller takes on your product, don't spend any time with it. That reseller channel is not going to be very successful. That's just a little tip of 20 years selling into the education technology market through indirect sales across Asia. It's very difficult. If a reseller says yes to that model, firstly, you're going to give away a large portion of revenue. And secondly, it won't ever generate revenue enough to do anything with. But I'm biased, Rita.
No, you couldn't say it. It just isn't, it isn't a shortcut. There's no shortcut to selling into the education market in the US. The good news is when you do sell something into the US education market, you typically have the ability, if the product is implemented and people enjoy it, you tend to keep it being sold year after year. But it does, the bad news is it takes a long time to do that.
I've actually got a question, Rita, from somebody in the group here, which I think is really a great question. Do you have an insight as to picking a direct versus indirect sales channel in the US school market? Do you have a sort of some data points that you think will, when people should be considering indirect or direct sales?
I think my biggest statement is whether you're going to develop a direct sales channel or an indirect sales channel, you have to first sell here yourself. And you have to learn what will work best. So it would be irresponsible for me to say one is better than the other. I can only answer that after you get out and pilot your product and figure out who is the most likely person to be purchasing it in a university or a school. And then based on that, what your price is, and then based on that, how easy or hard it is to be able to reach them.
Okay. Do you have, and you may not have one off the top of your head, but do you have sort of like an anecdotal story about a company that may have been selling indirectly in the US where they had no local US presence, but had a large international presence? Do you have that experience? Do you see them?
I can give you a different example. There isn't one that's popping to my mind. I can give you more examples of people who did not do that well. Actually, one of our ARC companies, Tippy Talk, which is a special education app out of Ireland, is going to be opening a U.S. Office in Denver, and that is because they have done very well in Europe, and they need to break into the U.S. market. They've had very good success so far in their pilots in the U.S., and they've determined that they want to invest in the U.S. market, and to do that, they're opening their own office.
Okay.
Penda Learning, which is a UK company, a very successful competitor to Renaissance Learning, a remediation platform to help students. They were very successful in the UK and then in Europe, and then they came to the US and opened an office here. And then they got the office established in 3 years. The owners went back to the UK, and they had to have a thriving US operation now.
Okay, cool. Thank you.
All right. Any other questions before I move on?
None in the chat, so you can move on, Rita. If there is, I'll bring you back to it.
So this, oh, I'm gonna go back. Hold on. Now I'm in the loop. You guys are, I'm gonna be unable to give you my my joke. I've just ruined my joke. Okay, so because I'm in the loop, I'm going to give you the joke now. So there are many fish in the sea looking for investment here in the US. There is an expectation that all you have to do is sing us a song as an investor, and that a miracle will happen and money is going to arrive. That does not happen. It does not happen here in the US. It does not happen in Australia, right, David? There's no miracles happening because you... I want to move to the next segment. And this data comes actually from my colleagues at LearnLaunch, which is...
I've actually got a follow-up question to the comment about direct versus indirect, which I think is an interesting question before you jump into the investment market. Okay. Do you think, what sort of capital is required, do you think, to build in your experience, to build a sales team for a 12 or 18 month period, sorry, a 12 to 24 month period in the US, if you were selling direct or indirect?
I think you can't do it for under 250,000, and I think that 500,000 is a more reasonable amount.
And just to give us an idea, a sort of a middle to good BDM, business development manager in the K-12 school market, say in a big city in the US, what sort of annual salary will you be paying these people?
120,000 a year.
And what portion of that's base versus at risk, typically?
Well, you said in a big US city.
Yep. Yep.
So in a big US city, you're going to have to pay at least 100 to 120 US to get them on, and then plus commission. Okay. Outside of a big US city, you can sometimes get a business development person for 95 to 100,000, but then you spend the money in travel. You know, the compensation packages, 20% is a reasonable percentage to pay in bonus or commission.
Okay. There's a question from Matt Riddell. Matt, we'll ask your question in a minute because I think there's a better place because I've seen this presentation that will fit. So I'll ask that in a minute for you, okay?
Great.
You can go ahead, Rita.
Okay. Again, I was saying this data comes from my colleagues at LearnLaunch, and it's such good data, I wanted to share it. Basically, I remember I was telling you that there was a downturn, a little dip in the U.S. education funding in 2016, and that we've seen the increase in 2017, 18, and we're expecting in 19. And we think that that the real reason is that investors started really focusing on revenue versus aggressive growth with no revenue. So in the US today, there is an expectation you're coming to the table with revenue. We had a period in the US we call the Silicon Valley effect, which was no revenue, aggressive growth, and you'll make up for it. And we don't see that as appealing to investors today. Okay. This chart shows on the right-hand column, the large multi-stage VCs that typically invest in education companies greater than 10 million in capital are listed. The mid and micro VCs that invested 100,000 to 10 million are listed here. The venture accelerators and incubators are listed here, and they typically give 25 to 100K. And then at the bottom are the foundations that we have in the US, and you'll hear about those foundations. That's the Bill and Melinda Gates, Chan Zuckerberg, the Dell Foundation, that focus grants on education. This is a very important chart if you decide to seek US funding. You'll be able to at least use this chart to help guide who you call first. Good?
Yep.
Questions?
There is a question that sort of fits in here as well. Do you have any experience with sort of the what's the language I'm trying to, the blockchain market of, say, initial coin offerings or security token offerings? Are you sort of seeing that at all in the US?
Absolutely not.
No.
Not in education. There's talk of it, but we haven't seen any of it really happening. It's occurring in other markets, but not in education.
I am aware of one deal that was done here in Australia by a company, an early stage company that raised, I don't know the exact number, but more than $1 million through an ICO platform. So there is a little bit happening. I think there's a little bit of interest in that space. So here anyway. I think we're all watching, and we're all being very hopeful. Yes. I've got another question which I think we've answered, but I'll ask it anyway, and that is, in the social impacting space, are you seeing any social impactors that are making investments versus grants? So they're not necessarily just providing equity-free grants, but they're in fact taking equity positions. Absolutely. I think it's on my next chart. Okay. Okay. And for the person who asked that, in Australia there is one as well. So I'm aware that Save the Children in Australia are actually investing direct cash and taking equity positions into EdTech businesses. So that is happening here as well. Yep. Emerson Collective, which is down here on the chart. So the next chart is a snapshot look at the companies that are available in the pre-seed Series A chart, the angels. So if you go to the bottom of this chart, you'll see impact investors. And these impact investors do take capital in exchange for their commitment, and the metrics that they use, the KPIs that they use, are all social impact driven.
So Emerson Collective is not going to just invest in you without you being able to define KPIs and your social impact.
Do you, whilst we're here on this slide actually, Rita, do you have a comment about what sort of the average seed or seed plus or A minus or Series A might be in the US at the moment?
Well, since we are on this list, I think that the rounds tend to, are you asking about the rounds or
yes.
the rounds?
Yes.
Okay. So we typically find in Series A that companies are in the 1 to 3 million in revenue size, and they're raising 1 to 1.5 to 2 million in revenue. The seed plus to A minus, they tend to be companies in the 350, 400,000 in revenue, raising 5 to 750,000 in capital. And in the seed level, which has a little bit more action in it, tends to be companies in the 200,000 revenue range looking to raise 200,000 in revenue. The really important part for people to really look at in this chart is that there's very, very few players in the seed to Series A. Most companies in EdTech die here because there's not an additional funding source to be able to get them to the next, to cross the chasm. We see a lot of companies get to 400,000 to 500,000 in revenue, but don't have enough bandwidth to be able to continue.
And do you think that investors are pulling out of that space because they've been burnt, or because they don't fully understand the space, or they're finding, what, do you have a gut feeling as to why you think that there's no one in that sort of chasm, if you like?
I think it's just investors are risk averse here.
So for your knowledge, if the US capital market is risk adverse, you can multiply that by the biggest number you can think of, and then you've got a picture of the Australian risk adverse market for capital in EdTech. So, you know, to all of the early stage founders on this call who are trying to raise capital, we feel for you, absolutely.
So my message is, if you are, you know, trying to get yourself to 1 million to 3 million, do everything you can to invest in selling your product and bringing cash into your company through revenue. It's much, it's a multiplier effect for every dollar in revenue you bring in to the value of your company. And I just can't say that enough. You should look at this slide and go, what I really need to be doing is concentrating on bringing revenue into my company.
Yep.
Okay.
Thank you.
Oops, sorry. People always like to ask about multiples. PE firms are extremely active in the US, and they're many PE firms in the US today in 2019 are very interested in employing their platform strategy and growing their platform strategy. Traditional education companies are in the midst of restructuring portfolios through M&A. That's just a fact. It was a fact in the last 5 years. So PE firms are active in growth and growing through acquisition. And if you're looking to acquire, that's where you probably have to look. This is a list of the most active buyers in the US from 2013 to 2017. And the reason that we show this slide is for you to really get an idea that the number of players who are actively looking to buy is fairly slim in the US. And Blackboard is a platform play, Pluralsight is a platform play, PowerSchool is a platform play, Frontline is a platform, Houghton Mifflin is a traditional textbook publisher, Well North is a PE firm, John Wiley is a long-established publishing firm. So this, I think, is a great slide just because it really shows that there aren't that many places to sell. And they're finite and you can identify them. Now, David, do you want to tell your story about Renaissance Learning here?
And I can't in this forum, sorry.
Okay, great. Oh,
Just
that was my last
forum,
slide.
I can't tell that story in this forum, sorry.
Great. Okay, so now we have left 15 minutes for you all to be able to ask questions of me.
I'll start with some questions whilst people think. If you just put them in the chat, we'll moderate them. I've got a couple of questions around. I'm specifically interested in an investor's view around efficacy of an EdTech product and whether you think that it's important or not important, or whether sales and revenue trump efficacy.
Sales and revenue trump research,
Yeah.
certainly. However, anything that you can do that can provide a research-based proof of your efficacy is going to help your sales. So research to practice has a competitive advantage in the marketplace. And so I really encourage anybody as they're building their products to do so thoughtfully using research to prove its efficacy in order to have a sales competitive advantage. Now, David, is that what you asked?
Yeah, it is. It's because the reason I ask it is because I think there's a chicken and an egg process there around efficacy versus sales traction. And in fact, I think they're connected personally. Like this is going back to the reseller conversation that we had, or the indirect sales conversation we had a couple of minutes ago. And that is, I think that to really make a big impact of your sales, you need to think about the impact on the learner. Typically, if it's a student-facing tool, right? If it's a learner-facing tool. And that typically requires efficacy because most educators don't want to put their students through guinea pig processes, right? So there is a combination that there is a very close link in EdTech between product development and management, marketing, messaging, and then the impact of that, which is all linked together. And that I think does help in the traction and the sales. But I ask it specifically because using your language of research to practice, I think that's a term that we don't use a lot in Australia yet. I think it's coming. But I think that there's an idea that somehow you need to have a yin and a yang relationship between the sales traction to get investment and the efficacy of the product so that you can get the sales and then prove that there's a longer term viability for the business. So I'm not sure if that little spiel makes sense, but that's what I'm suggesting.
Well, we should ask your audience members.
Yeah, absolutely. If anybody wants to jump in there, we'd be delighted to hear it. Whilst we do that, I do have a question here about investors specifically that have maybe a niche around cutting edge tools versus, you know, mainstream tools. Do you think that there are specialist funds like that you're seeing?
I think that every Series A funder or Series A through C funders have their niche that they are interested in building a portfolio of companies around. And so I just think it's very important for you to do your research on what investors are, what their criteria are, and that will help you determine who would be a good fit for what you're doing. So I think the question is too broad for me to specifically answer, but I think that the lesson is absolutely investors, especially in the earlier stage, Series A and below, are basically pretty specific about what they're looking for and if you meet those criteria. And the reason for that is, guys, we get so many people who, all those fish in the sea, there are so many looking for funding that if you aren't really deliberate in your criteria, you spend too much time talking to people and leading people. You don't want to lead anybody on that you're going to invest. So they're crisper in knowing what their criteria is because they have got so many more people in the funnel. Does that make sense?
Yeah, I think it does. It does. I've got a question here as well, which is, do US investors in education technology require customer bases for that company already in the US?
Say that again?
Yeah, so if you're going to get a US investor, do you have to have a US customer base already?
Yes.
Okay, cool.
I mean, I think you have to be able to show that you. So we at our capital, we have investments in companies that did not have customers in the U.S. when we were first met them. But through the process of our meeting them and through the process of our due diligence, they had to be able to show to us that they could scale sales in the U.S. So I think that you'll be hard pressed to get a U.S. investor without addressing the U.S. market.
Yeah, I've got a question here, which I think is a more strategic question versus a funding question, but I'll try and paraphrase it and ask it to you. So in essence, the question is, if you've currently got a business and it's doing okay, you're not specifically looking for funding today, but maybe over the next couple of years when you start to activate a US funding market, a US deployment sales strategy into the US, and you're looking for funding there, which do you think is the smarter thing to do, to go looking for the funding now and find an investor with deep knowledge of the US, or to continue to scale out your business prior to looking for that funding in the US?
No question. Continue to scale the business before you look for the investor.
Yeah, that's a really good point. I want to just quickly take up that point as well. And that is, do you have if you want to share, a war story of a company that maybe took investment too early and maybe got the wrong investor?
Oh, there's so many.
Yeah, you don't have to name names, but just to give us a bit of an idea.
So my initial reaction is probably enough. Many people, there are many horror stories of that very statement. I mean, the clearer you are in your business and the clearer you are about what the investment money you will take in will help guide you to the right kind of investor and the one that will stick with you. Because let's remember, an investor really is looking want to look at your investment opportunity over the long haul, over the whole, capitalization strategy. So if you're not able to articulate a clear capitalization strategy, you're not going to get the best investors. And then, so by default, if you are more haphazardly looking for capital without really firmly developed, the more developed you can be, the better off you are, because then you will have a better understanding of the kind of investors and the kind of capital you need.
Which is sort of leads us to our final question, really, and that is, we've spent a lot of time in the last hour talking about what the market is for potential investors. I'm wondering whether you might think out loud about maybe 1 or 2 or 3 bullet points about how you select an investor. So let's say you're in the lucky position to pitch to 5 people and 3 of them say, yes, we'd love to invest in you, for excluding valuation and capital number, right? Because obviously they're important. What other things do you think that an early stage founder should think about when considering taking capital from a EdTech investor in the US?
Okay, so the first thing everyone needs to understand is that we do not sit around with a bucket load of cash in a drawer just waiting for somebody to show up.
Well, why
we are
did you
not.
do it? I thought we were just going to have a webinar and you're going to just send cash into EFT. This is too hard.
And we are not. We may have a social impact mission. We may be warm-hearted people, but the capital markets, we're not philanthropists and donors.
Yep.
So we don't typically react to, this is a great idea how it's going to save the world, and therefore just give me money and the world will be saved. That mission is good and important, but it's one just very small part of a story. At the end of the day, every investor wants to know what the rate of return is going to be for the money they're putting out. They do not get out their checkbooks and write a check without knowing what the potential is to get that money back.
Yep.
And we want to know that you've got a path to revenue. We want to know that you've got a product that's saleable. And we all look at the team, especially in an early stage company, that you've got a team that's capable of being able to sell and market the product and be able to lead the company. So it's really those, in my opinion, those couple of criteria: team, product market fit, revenue story that makes sense, and that there's a path to return.
And the final point that I'll make there as well, Rita, as well for everyone on the call, when you're considering capital, consider every point of equity worth $1 billion, right? Not that you want that your business will be worth it, but think about what you're giving away for the capital you're getting, and you want to make sure that it's more than just money. In most instances, it needs to come with some other support factors too. So taking capital means you start giving away control to people. So be just really conscious of who you're giving away to some control to. So there's great opportunities, and I think really early stage businesses almost take any capital they can get, and I understand why. Everyone's the same, but at some point you need to start thinking about that term of smart money and what that means for you. So, Rita, I think that's getting very clear. Yeah, go ahead.
So there's one thing that I say to founders more than anything, and that is always be thinking about, you have, a finite amount of time. You have to decide how to deploy it. If you are going to spend your time raising money, it means almost invariably that you aren't doing other things. And you really, if you have the opportunity to get revenue for your product and you can do that, that time is much better spent doing that than raising money.
Yes, I like the idea. So to that end, Rita, I would like to thank you on behalf of the EduGrowth community for your presentation today and the ones you've done, I think, last week and one earlier this morning. So thank you very much. I really appreciate it.
I am delighted to connect with all of you. Go to LinkedIn, link in with me if you have any follow-up questions, and you all have a fabulous rest of your day. Thank you, David. Bye, Ruth.
Thanks, Rita.